what's the purpose of the survey?
Because the rules say, rule.
Okay, I'm sorry, but I'll catch you.
Isn't he bringing donuts next?
Thank you.
Oh, the Viking. Oh, my. Is this the new one?
Just off the press.
Oh, okay. Thank you, sir.
Updated one. Yes. Goal this summer to bike.
Mary, we're gonna make like.
I think that'd be good. All right, seeing that it's 7 o'clock, we're going to call to order the meeting of the Richfield HRA. Please note the attendance. The first item of business is the approval of the minutes of the special concurrent HRA and City Council work session of April 14th, 2015, and the regular HRA meeting of April 20th, 2015.
So moved.
Second. It's been moved and seconded. Is there any discussion or questions? All in favor of approval of both of those minutes, say aye.
Aye.
Aye. All opposed? We have approved the minutes. All right, our next item is approval of the agenda for tonight's meeting.
I so move.
Second.
It's been moved and seconded. All in favor of approving the agenda, please say aye.
Aye.
All opposed? We've approved the agenda. Okay, next we have the consent calendar, and I'm going to turn it over to Executive Director Devich to explain the items
Thank you,
for us.
Chair Supple and members of the HRA. Tonight's consent calendar, which contains a couple of items in this case, which are acted upon by the HRA in one motion. Once the consent calendar has been approved, both items have been approved and no further action on them will be necessary. Tonight we have item A, consideration of the approval of resolution authorizing the use of an Affordable Housing Initiative Fund loan for the acquisition of 7316 Clinton Avenue by the West Hennepin Affordable Housing Land Trust. And item B, consideration of the approval of authorizing the chairperson and executive director to execute a contract with a qualified demolition contractor for the demolition of structures at 7309 10th Avenue in an amount not to exceed $12,000. And that concludes tonight's consent calendar.
All right, is there a motion?
I'll move the consent calendar.
I'll second it. It's been moved and seconded. Is there any discussion? All right, all in favor of the consent agenda passing, please say aye.
Aye.
All opposed? Okay, we've passed both items on the consent agenda. The fourth item on our agenda is consideration of a request to amend a promissory note and mortgage related to the new home loan program to Michael Solon of 924 66th Street West. Mr. Devich.
Thank you, Chair Supple, members of the HRA. This is a common kind of thing that we deal with. It's some of the older loans that we have under the new home program loans. And again, this is a consideration of a promissory note and a mortgage for the property held at 924 66th Street West. And I've asked Karen Barton, the Assistant Community Development Director, to make this presentation to the HRA.
Thank you, Chair Supple and Commissioners. Back in 1987, Michael Solon and his late wife, Deborah, purchased the house at 924 66th Street West with the assistance of a $22,900 second mortgage through the HRA's new home loan program. The promissory note matures upon various occurrences, which include upon payment in full of the first mortgage or refinancing. Recently, Michael and his current wife, Angela, were looking to refinance their home, and their lender contacted staff to request the subordination of the loan. Under the provisions of the note, that would trigger full repayment of the loan at that time. The intent behind the repayment provision of this mortgage, of the new home mortgage, was to ensure that the homeowners receiving the HRA assistance repay the mortgage upon the sale of the property, so that the HRA can recycle these funds and use them to assist others in the future. The intent was not to create a burden on the homeowners by requiring repayment when they were refinancing. However, the language in the note, as it was written at that time, was that the was not reflective of that intent. Instead of requiring repayment upon refinancing, staff is recommending amending the note and mortgage to make the loan due and payable upon the earlier of either the sale and transfer of the property or 10 years from the date of the amendment, which would be May 20th, 2025. Be happy to answer any questions that you might have.
Are there any questions?
I have a couple questions.
All right, Commissioner Rubenstein.
Thank you. This is one of those twin homes, is it not?
I'm not sure if it is a twin home.
Because that's pretty much right next to Woodlake Village. So there's only so many houses. It has to be one of those twin homes. And especially the date that 1987, that was when they were built. I looked at that, and this man is pretty much an original owner of one of those homes. There hasn't been a huge amount of turnover in those, but there has been, and to think that somebody who is an original owner is still in that same home, still in Richfield, makes me feel extremely inclined to amend this appropriately.
All right, are there any other questions or comments?
Comment, I agree with the staff that the intent was not to hurt people to refinance, especially if they could save a few bucks to stay in Richfield and everything. I don't think that the intent was the program. So I agree with the statement. But that, may I make the motion?
Sure.
Make the motion to adopt an amended promissory note and mortgage related to the new home loan provided to the Michael Solon of 924 66th Street West, requiring the loan to be due and payable upon the earlier of the sale or transfer of the property or 10 years from the date of the amendment.
Is there a second?
Second.
It's been moved and seconded. Any further discussion? All right, hearing none, we'll put the question before us. All in favor say aye.
Aye.
All opposed? Okay, we've approved the item. Moving on to number 5, this is consideration of a resolution authorizing the Richfield HRA to reduce the original tax capacity of the Gramercy Park Cooperative Tax Increment District due to homestead market value exclusion. Mr. Devich.
Thank you, Chair Supple, members of the HRA. Actually, items 5 and 6 are basically identical items. And before I ask Ms. Barton to go over the staff report for number 17 and 18 respectively for items 5 and 6, let me just say that, you know, a few years ago they changed the formula and reduced the homestead tax brackets, and that had an impact on tax increment districts. A lot of districts in the state had a really tough time making their increment payments because those payments were based on a different higher value. And so the state changed things around and put together a fix, so to speak, and let us take the base down. We've never really had a problem where we were kind of in dire straits of meeting the obligations of the district, but at the same time, these two actions that are coming up would put us back in kind of the place we were before the change was made, and really kind of where we anticipated being. So with that, I'm going to ask Ms. Barton to take over and make a presentation.
Thank you, Chair Supple, Commissioners. As was mentioned, in 2011, the legislature adopted the homestead market value exclusion, which revised the tax calculation for homesteaded property and as a result reduced the taxes that homestead properties pay. This also reduced the tax increment generated by homestead properties. And in 2013, the legislature adopted a fix which would allow cities an option to reduce the base in a tax increment financing district and lessen the impact on the tax increment districts that contained owner-occupied housing, therefore resulting in increased tax increments in the district. In order to allow the Housing and Redevelopment Authority to reduce the original tax capacity, the City Council was required to pass a resolution authorizing them to do so. The City Council adopted that required resolution on May 12, 2015, with a vote of 5-0 in favor. The reduction will result in an estimated increase of increment in the amount of $22,561 for the HRA to use for administration and qualified redevelopment activities. and an estimated increase of $195,971 to the note holder for payment of the pay-as-you-go note. And we're available for questions if you have any.
Are there any questions?
Questions.
All right, Commissioner Gepner?
In layman's terms, what are we doing?
So, Chair Supple and Commissioner Gepner, when you think about tax increment financing, and I'm going to oversimplify it a little bit, but there's the pre-TIF district taxes that are frozen, and then there are the everything else is increment. And so when the legislature adopted this market value homestead exclusion, that affected both the base and the increment because they applied this to the house, to the properties. And what that did was changed how they were taxed, what they were taxed at. So they were taxing them, they were collecting a grand total lesser amount of taxes for the properties, which the result was that there's less increment and I'm trying to think how the base. I think in the way the legislature approved it, the base was not affected. And what we're saying is the base should have been affected. And that's what the legislature allowed cities to go back and retroactively say, we're going to reduce the amount of base in the formula. In effect, what it means is that there's more increment getting collected and less is going to the base. And normally a city would say, well, we want our base too because that's what we get a portion of that for our general fund levy. But in the case of this, where the HRA collects 10% of the increment for admin and 15% into our housing fund, that combined 25% that we get from the added increment more than offsets the amount we're losing by having the base reduced through this action. You were asking for layman's terms. I don't think that was it.
Well, in doing such, or without doing it, then we might not get paid back for the amount that was fronted?
Well, we didn't front it.
Okay.
So if we didn't do this, the note holder, the developer that fronted the amount of money might not get paid back what they put into it. They know that going into it. We give them all kinds of warnings that we don't control the taxes, and it's kind of money in, money out. So to the extent that they're paying less taxes, that rates go down, there's not as much there. Where they get into trouble sometimes is they sell those pay-as-you-go notes to banks, and so it might be the developer paying less taxes, but that bank that bought the note or some other entity that bought the note receiving less in increment. So essentially, the staff report talks about the increase to the note holder and the increase to the HRA. Again, the $22,561 increase to the HRA is more than the increased or the taxes that we're saying we don't want collected as base anymore.
Does that mean the county and the school district take a hit?
Yeah, the county and the school district do get hit. That's true.
Can I just add for the commissioners, Chair Supple? No, I mean, a really simple way of looking at it, is, if you had a base and an increment, which every district is, and the base was calculated at Formula A, and the increment was calculated at Formula A to start with, and all of a sudden and everybody made an agreement based on that, and you went along, and who knows what the people who are the note holders, because everything we do is pay as you go. We don't sell bonds. And so it's pay as you go. So people make assumptions who create development in Richfield that they're going to be paid back according to whatever formula we agree to. And all of a sudden, a third party comes in and changes it. So the base was still calculated under Formula A, but now all of a sudden, the increment is calculated under Formula B or a different formula, which now shrinks that, makes it much more disadvantageous for for not only the investor who's doing the pay-as-you-go, but also for us. I mean, we estimate what we're going to get out of a district when we go forward. And the legislature, again, took a look at this because there's a lot of places across the state of Minnesota that will sell debt on the front end. And so when they had to pay the debt back, and all of a sudden this new formula calculates the increment, and all of a sudden they don't have enough money there to pay debt, and someone's on the hook to do that. And sometimes it's the municipality. So in a simple way of looking at it, all it does is restore both pieces again to the same, basically the same formula, and again, restores everybody back to the assumptions that they had in the beginning, and happens to be financially a win-win for the HRA and for the city of Richfield.
So, go ahead.
I mean, yes, one could say, yes, there's a slight loss to the school district and the county, but keep in mind that puts it back to the way the assumption was in the very beginning.
So why did the legislature do the first change? Why did they put in prohibition?
Well, originally, this was something that would assist cities in any property that isn't in a TIF district. It is a benefit to the residents and to the city. And it is complex because the formulas are so complex for this stuff. And it really did take a couple of years after the legislature first adopted that for people like Ellers and for cities to figure out what the impacts were and how to ask the legislature to fix it. So we're trying to find simple ways of explaining it, and the concept might be simple, but in practice it is pretty complex.
All right, Commissioner Elliott?
I'm just curious, I'm assuming that these two proposals were brought to us or we were asked to address them by developers or someone on the other side of or are we doing this on our own initiative?
We're doing it.
And also, is it happening metro-wide where people have the same problems with their TIF districts?
It is happening metro-wide. We're doing it on the advice of Ellers and Associates. They go through all of our TIF districts annually. They tell us where they see issues or problems. They saw this as an issue where we weren't collecting as much in admin in the housing fund, and we weren't collecting as much to go to the pay-as-you-go note holder that was anticipated in the original deals. And so they brought it.
We haven't heard from any of those people? So this is strictly came from Ehlers?
Actually, I do know we have heard from Gramercy Park. We have not heard from the other one.
Okay. Did they make a request, or did they just ask if we were doing something to address it?
They asked if we were aware of it. They asked if we could quantify the impact to them on their pay-as-you-go note.
They're not keeping their own records? I'm just curious. I'm just wondering, it seems like it's our side, and it's just interesting if the warnings are all put out there. And I'm not against this. I'm just trying to get a better understanding of how often we can anticipate something similar.
Yeah.
I know the legislature isn't going to bounce it around and do some sort of creative adjustment so that they can say, look what we did to your homestead taxes. But I'm just wondering if this is a one-time shot or if it's something that's going to be recurring.
Commissioners and Chair, I think this was a one-time thing to fix an unintended consequence of what they were doing with adjusting the tax classifications. And you have to understand that tax increment financing is and putting the deals together is very complicated. And usually when they put a deal together, it's people putting the deal together representing the developer and people on the city side who are very familiar with tax increment financing and run the numbers back and forth and can tell you what a slight iteration in the numbers would mean for the developer or for the city. Once those deals are done and years go by, often the people who are left in charge of whatever that particular property is are, I don't want to use the word clueless, but they're not expected to know. Well, I don't want to seem pejorative in any way to say that people don't. They wouldn't be expected to know that. It's very complicated.
No.
And there's a lot of cities that simply don't understand it, and that's why they have people like Ellers and Public Corps. We keep track of our stuff pretty carefully, and we knew from the beginning when this changed that it wasn't good for our tax increment districts, but we're so conservative when we make the estimates on the front end In fact, I think we use a lot of times a level market value. And so, I mean, so that helps. So we weren't critically impacted like a lot of other cities. But at the same time, when we put these things together, the idea is looking forward to say, you know, we're going to have that 10% admin to administer the things we've already put in place. We are going to have 15% going into the housing fund, so we can do the kind of programs that are vital to Richfield. And to take, you know, when you lose from those two programs, it's more than just meeting the obligations of the TIF district. You're kind of strapping the HRA from being able to do the kind of things that we're here to do.
And what we didn't want to be faced with was, and I was going to make all the exact same points Steve was going to make, we made there. You know, they don't necessarily understand all these intricacies. They do on the front end because they hire legal counsel that understands this stuff on the front end. At some point in every TIF district, they bring that legal counsel back in to look at something or another. What we didn't want to have happen is to address this 5 years from now when we had the fix available to us at this point and continue on 5 years without having made our best effort to get them into compliance with what we all planned on the note being on the front end.
Okay, thank you.
Commissioner Rubenstein?
I have one question. It may or may not be relevant, or you may or may not know the answer. This is all based on homestead values, correct? Gramercy is a co-op, and the other, City Bella, is a condominium, if I'm not mistaken. In a lot of co-ops and condos these days, a lot of the units are not homesteaded. They are rented out. And what does that have any effect on the homestead value of the overall property?
You know, John, I don't know if you know, I don't know specifically. My first assumption would be that most of the units are still homesteaded.
Mm-hmm.
And I would think that if a unit was not homesteaded, it would not have fallen into the classification of the homestead class rates. But at the same time, and I can't tell you for certain, but I thought when they made that adjustment, they also adjusted the non-homestead rates too, but I can't tell you for sure that they did or didn't. I don't know if you recall that at all, John.
I don't think they did,
You don't
but we
think
can
they did?
check into
Yeah.
that.
Yeah, that is a good question.
Because I know that there have to be some rented units there, considering the prices had been so extremely low and they still weren't selling. I mean, City Bella was ridiculous to see how low things had gone, considering the original offer, what people bought in it new.
But the issue's on two sides of it. It's on both the before TIF and after TIF side of it.
Mm-hmm.
On the after TIF side, it's what's there now and whether or not those properties are homesteaded and how that affects the properties. On the before side, the question is, were there homes there beforehand? And if so, when we calculate that base taxes, then the Hennepin County goes in and says, well, we're going to adjust the base value of what was there before as if they had this market value homestead exclusion. And so that's a part of this as well.
Are there any further questions? Then the item before us is to approve a resolution authorizing the Richfield Housing and Redevelopment Authority to reduce the original tax capacity of the Gramercy Park Cooperative Tax Increment District due to homestead market value exclusion.
I'll second.
All right, it's been moved and seconded. Any further discussion? All right, all in favor, please say aye.
Aye.
All opposed? All right, we've passed the agenda item.
Chair
Move-
Supple, can I ask
yes.
you, who made the motion? You did.
I did.
Just want to make sure.
Okay, thank you. Moving on to item 6, consideration of a resolution authorizing the Richfield HRA to reduce the original tax capacity of the Lindale Gateway LLC Tax Increment District due to homestead market value exclusion. Mr. Devich?
Yes, Chair Supple, members of the HRA, this is identical to the item you just got through talking about, exact same issues, different property, and I'll let Karen talk about it.
Thank you, Chair Supple and Commissioners. Yeah, I'll skip over all the background and get to the last paragraph in the staff report about the reduction will result in an estimated increase of increment in the amount of $40,511 for the HRA to use for administration and qualified redevelopment activities, and an estimated increase of $351,887 to use for debt service for the taxable GO tax increment refunding bonds, Series 2012B, or repayment of the HRA's interfund loan. If you have any questions on this one, we'd be happy to answer them.
Commissioner Gepner?
I'll move the motion.
Second.
It's been moved and seconded. Any further discussion? All right, the current motion before us by Mr. Gepner is to approve a resolution authorizing the Richfield Housing and Redevelopment Authority to reduce the original tax capacity of the Lindale Gateway LLC Tax Increment District due to homestead market value exclusion. All in favor say aye.
Aye.
All opposed? All right, we've passed the recommendation. Okay, next we have HRA discussion items, and I'd like to thank Mr. Gepner for the bike maps he gave us all. Commissioner Gepner?
Good, and with that introduction, I have a series of questions. And they were prompted by the items that were on today's agenda. I'm a senior person. I'm disappointed that we don't get paper packets anymore. I'm having to rely on the screen version. And I'm not seeing the same problem here on the version that's provided us in-house as the PDF that we have to use. And what happens in that instance is somebody is scanning the documents, and if they don't put them in the scanner correctly, they are at an angle. And I'm already having problems reading the screen, so that if there was some way that they could be less angled, I'd appreciate it.
Yes, Commissioner Gepner.
Yes.
Members of the HRA, I'll talk to folks about that.
Okay,
I'm not sure if those are automatically pulled into the machine, by the machine, or if they're hand-fed one by
placed.
one.
Yeah.
I doubt they're hand-fed one by one, but I'll check into it. That
You
makes a
know,
lot
the
of sense.
machines can skew those things. I've had it happen at home even.
Right,
Okay.
that's what I'm not
So
sure if that's happened or if that's happening or not, but I'll check into it for sure.
With respect to sublimination, that's not the term. The loans that people are renegotiating, and we're becoming the second on the new loan. There's a fee that they pay to cover some of your costs. Is am I correct in understanding that that's the case?
Yes, that's correct.
Then the third thing is, one of the things that we passed helps create less expensive homes in Richfield, where we're providing, to the population that needs help to have homes. And yet at the same time, we're asking Met Council to burden us with less of the affordable housing. So is that oxymoronic? Are we sending the wrong message to Met Council when we do good things for our less advantaged citizens and then ask them to not continue to disadvantage us?
Commissioner Gepner and HRA commissioners, I don't know if anyone on staff has ever come to the conclusion that we should be adding 0% affordable housing. And I don't know if I've heard that from policymakers either. Some of the numbers that the Met Council had been prescribing for us for affordable units in the future seemed unrealistic and seemed almost burdensome at the levels that they were suggesting it. But to do a small percentage of the new single-family homes that are coming into the community as affordable, we as a staff support. We think that we've gone through with this housing visioning group, and you'll see their final study, their final recommendations next month. But I think the kind of the watchword that came out of that over and over and over again was balance. They would like to see some, a balance of upper end, a balance of affordable, a balance of, for young families, a balance for seniors, a balance. And we think that doing the new home program, doing 2 or 3 affordable single-family homes a year accomplishes that balance. And we don't think it's inconsistent with us telling the Met Council that requiring us to do thousands of affordable units is excessive.
Okay, thanks for the distinction.
I wanted to make a comment, first of all, about how exciting it is to see 6 developers with really great project development ideas come to the Cedar Point Commons to development. And I know this is a lot of work for staff, and I know that staff have really been trying to drum up all this, but it's really, really exciting to see this. I'm really excited to see the next steps forward, and I want to thank the HRA for all the commitment they're making to extra meetings so we can move this fast. Everybody wants it to move fast because it's been a long time in the coming, but this is just really exciting times, and I want to say that how grateful I am to all the hard work that you're putting in for this.
Thank you very much.
Are there any other discussion items?
I get a question in regards to Lindell Gardens. I had somebody come up to me a week ago and told me they'd been told that construction of something is supposed to start there in August. Do we have any insight or any idea of what they're doing and when something may start?
Chair Supple, Commissioner Elliott. We have recently been in discussions with the Cornerstone Group, the developer for Lindell Gardens. They will be coming before the City Council next week to present an update and make a couple requests. They do not have anything under construction at this point, and they will be presenting that in the update, what their plans are. They're still hoping to get under construction late this year if they can get everything put together, but it's tentative.
Can you give me any assurances as why I shouldn't be nervous about her making more requests?
I could give you no such assurances.
Thank you.
Are there any further discussion items? All right, then we will move on to the Executive Director report.
Chair Supple, members of the HRA, I really don't have any report.
Okay. Next are claims and payroll.
So moved.
Second.
It's been moved and seconded. Any discussion? All in favor of approving the claims and payroll, please say aye.
Aye.
All opposed? Okay, we've approved the claims and payroll. Seeing that we have finished the agenda, the meeting is adjourned. Thank you.
Thanks.